Question 1. Topic: Beneficiary designations. Mr. Reynolds has designated his spouse as the primary beneficiary and his brother as the contingent beneficiary on his Arizona term life insurance policy. After a few years, he decides to change the beneficiary to his adult child. What must Mr. Reynolds do to properly change his beneficiary under Arizona law? A. He must notify the insurance company in writing and obtain the consent of both the current beneficiaries. B. He must submit a signed beneficiary change form to the insurance company. C. He must revoke the policy and purchase a new one with the desired beneficiary. D. He must submit a notarized affidavit to the Arizona Department of Insurance. Answer: B. He must submit a signed beneficiary change form to the insurance company. Explanation: in Arizona, a policyholder has the right to change beneficiaries at any time unless the beneficiary is irrevocable. To properly change the beneficiary, Mr. Reynolds must submit a signed beneficiary change form to the insurance company. He is not required to notify the current beneficiaries or obtain their consent unless they were designated as irrevocable beneficiaries. Revoking the policy is not necessary, nor does Arizona law require a notarized affidavit for this process. The insurance company must have a record of the change for it to be valid under Arizona law. Ask 201124. Question 2. Topic: Premiums. Which of the following correctly describes how premiums are affected by converting a term life insurance policy to a permanent life insurance policy in Arizona? A. Premiums typically decrease after the conversion to permanent life insurance. B. Premiums remain the same since the insured's age and health do not affect the new policy. C. Premiums typically increase because the permanent policy offers additional benefits and features. D. Premiums are waived during the conversion process under Arizona law. Answer: C. Premiums typically increase because the permanent policy offers additional benefits and features. Explanation: when a term life insurance policy is converted to a permanent policy, premiums generally increase because permanent life insurance offers additional features such as cash value accumulation and coverage for the insured's lifetime. The premium for the new permanent policy is based on the insured's age at the time of conversion, which increases the cost of the policy. Option A is incorrect because premiums do not decrease, and B is incorrect because age and health are relevant in calculating the new premium. Arizona law does not provide for premiums to be waived during conversion. Ars 201222. Question 3. Scenario-based. Topic: Claims and payout procedures. Mrs. Martinez's husband Alex passed away unexpectedly while holding a term life insurance policy. Mrs. Martinez files a claim for the death benefit but is informed by the insurer that her claim is being delayed because Alex had not disclosed a pre-existing heart condition during the application process. What is the insurer likely to do under Arizona law, and how should Mrs. Martinez proceed? A. The insurer will deny the claim outright due to misrepresentation, and Mrs. Martinez cannot contest this decision. B. The insurer must pay out the full death benefit because pre-existing conditions are irrelevant after the policy is issued. C. The insurer can contest the claim and may deny or reduce the payout if the misrepresentation was material and occurred within the contestability period. D. The insurer must immediately pay the full benefit, but Arizona law allows Mrs. Martinez to be taxed on the payout. Answer: C. The insurer can contest the claim and may deny or reduce the payout if the misrepresentation was material and occurred within the contestability period. Explanation: under Arizona law, life insurance policies generally have a contestability period of 2 years. During this period, the insurer can investigate and potentially deny claims if they discover that material misrepresentations were made on the application. Since Alex did not disclose a pre-existing heart condition, the insurer has the right to contest the claim within this period. If the insurer determines that the misrepresentation was material to the issuance of the policy, they can deny or reduce the payout. After the contestability period, the insurer is generally obligated to pay the claim even if a misrepresentation is discovered. Option A is incorrect because Mrs. Martinez may have legal recourse if the contestability period has passed or if the misrepresentation is deemed immaterial. Arizona does not allow taxation of life insurance payouts as ordinary income. Ars 201204. Question 4. Topic: Arizona life insurance disclosure requirements. When an insurance producer in Arizona is selling a term life insurance policy, what must they disclose to the prospective insured according to Arizona law? A. The producer must disclose the surrender charges and investment options of the term policy. B. The producer must explain the lack of cash value in a term life insurance policy and any associated costs, fees, and limitations. C. The producer must disclose the tax advantages of the term life insurance policy. D. The producer only needs to disclose the death benefit amount and premium costs. Answer: B. The producer must explain the lack of cash value in a term life insurance policy and any associated costs, fees, and limitations. Explanation: under Arizona life insurance disclosure requirements, producers must fully explain the nature of the product being sold, including the fact that term life insurance does not accumulate cash value. They must also disclose all costs, fees, and limitations associated with the policy, ensuring the prospective insured understands what they are purchasing. Surrender charges and investment options are irrelevant for term life insurance, which lacks cash value. Producers must be transparent about policy costs but are not required to discuss tax advantages. Ask 201243. Question 5. Topic: Term life insurance riders. Which of the following riders typically provides an additional death benefit if the insured dies as a result of an accident? A. Waiver of premium rider. B. Accidental death benefit rider. C. Terminal illness rider. D. Child term rider. Answer: B. Accidental death benefit rider. Explanation: the accidental death benefit rider pays an additional death benefit if the insured dies as the direct result of an accident, typically under specified conditions. This rider is often added to term life insurance policies to provide extra protection against accidental death. The waiver of premium rider allows premiums to be waived if the insured becomes disabled. The terminal illness rider allows for the acceleration of death benefits if the insured is diagnosed with a terminal illness. The child term rider provides coverage for the policyholder's child. Ars 201256. Question 6. Scenario-based. Topic: Policy lapses, reinstatements, and cancellations. Mr. Jacobs, an Arizona resident, accidentally missed a premium payment for his 20-year term life insurance policy. A month later, he realized his policy had lapsed. What options does Mr. Jacobs have for reinstating his policy under Arizona law? A. He can reinstate the policy within 90 days without providing any additional information or premiums. B. He can apply for reinstatement within a specified time frame, but must pay back premiums and provide proof of insurability. C. He cannot reinstate the policy once it has lapsed and he must purchase a new one. D. He can reinstate the policy only if it lapsed due to the insurer's error without any action on his part. Answer: B. He can apply for reinstatement within a specified time frame, but must pay back premiums and provide proof of insurability. Explanation: under Arizona law, life insurance policies, including term policies, typically include a grace period of 30 to 31 days after a missed premium payment. If the policy lapses, the policyholder has a certain period, often up to 3 years depending on the policy terms, to apply for reinstatement. To do so, Mr. Jacobs must pay all back premiums plus interest and may be required to provide proof of insurability, a medical exam, to show he is still eligible for coverage. Option C is incorrect because policies can usually be reinstated. Option A is incorrect because proof of insurability is often required. Ask 201215. Question 7. Topic: Mortality tables and risk classification. Which of the following factors would typically place a person in a substandard risk class for term life insurance, thereby increasing their premium rates? A. The person is a non-smoker with a healthy body mass index (BMI). B. The person works in a high-risk occupation, such as a construction worker. C. The person engages in regular exercise and has no family history of heart disease. D. The person is under 30 years of age with a stable financial background. Answer: B. The person works in a high-risk occupation such as a construction worker. Explanation: a person who works in a high-risk occupation such as construction would generally be classified as a substandard risk due to the increased likelihood of injury or death. This classification often results in higher premiums. Factors such as smoking, poor health, or high-risk hobbies can also lead to substandard classification. Option A, C, and D describe individuals who would likely fall into preferred or standard risk classes depending on the insurer's underwriting guidelines. Ars 201108. Question 8. Topic: Renewable term policies. Which of the following correctly describes a feature of renewable term life insurance policies? A. The policyholder can renew the policy without providing evidence of insurability, but premiums increase with age. B. The policyholder must submit to medical underwriting each time the policy is renewed. C. Renewable term policies offer a guaranteed premium rate for the life of the policyholder. D. The policyholder cannot renew the policy beyond the original term length. Answer A. The policyholder can renew the policy without providing evidence of insurability, but premiums increase with age. Explanation. Renewable term policies allow the policyholder to renew the coverage at the end of the term without undergoing medical underwriting. However, the premiums typically increase with each renewal because the insured is older, which increases the risk for the insurer. Option B is incorrect because no medical underwriting is required at renewal. Option C is incorrect because premium rates are not guaranteed for the life of the policyholder in a renewable term policy. Option D is incorrect because the policy can be renewed under specified conditions. Ask 201221. Question 9. Topic: Simplified issue versus fully underwritten policies. What is the primary difference between a simplified issue and a fully underwritten term life insurance policy in Arizona? A. Simplified issue policies do not require any medical information, while fully underwritten policies do. B. Fully underwritten policies typically offer higher coverage amounts than simplified issue policies. C. Simplified issue policies have lower premiums than fully underwritten policies. D. Fully underwritten policies are only available to policyholders over 65 years old. Answer B. Fully underwritten policies typically offer higher coverage amounts than simplified issue policies. Explanation. Fully underwritten policies usually offer higher coverage amounts because the insurer conducts a more detailed assessment of the applicant's health, including medical exams and underwriting processes. Simplified issue policies, which do not require a medical exam but may involve a health questionnaire, generally offer lower coverage limits, while simplified issue policies are faster and easier to obtain. They often come with higher premiums per dollar of coverage compared to fully underwritten policies. Option A is incorrect because simplified issue policies may still require some health information. Option D is incorrect because fully underwritten policies are available to individuals of all ages. Ask 201113. Question 10. Topic: Taxation and legal aspects. Under Arizona law, how are the death benefits from a term life insurance policy generally treated for tax purposes? A. Death benefits are subject to both federal and Arizona state income tax. B. Death benefits are typically exempt from federal and Arizona state income tax. C. Death benefits are taxable only if the beneficiary is a non-family member. D. Death benefits are always subject to estate tax, regardless of the policyholder's estate size. Answer B. Death benefits are typically exempt from federal and Arizona state income tax. Explanation. Under both federal and Arizona law, death benefits paid out to beneficiaries from a term life insurance policy are typically exempt from income tax. However, if the policyholder's estate is large enough to be subject to estate tax, the life insurance proceeds could be included in the taxable estate, but this is not related to income tax. Option A is incorrect because death benefits are not subject to income tax, and option D is incorrect because estate tax only applies under specific conditions. ERS Section 101, ARS 201240. Question 11. Topic: Arizona grace period for premium payments. How long is the statutory grace period for late premium payments on a term life insurance policy in Arizona? A. 10 days. B. 15 days. C. 30 days. D. 60 days. Answer C. 30 days. Explanation. In Arizona, a term life insurance policyholder is given a 30-day grace period after premium due date to make their payment without the policy lapsing. During this time, the policy remains in force. If the premium is not paid by the end of the grace period, the policy may lapse, but the insured may have the option to reinstate it within a certain time frame. Ask 201215. Question 12. Topic: Contestability period. Under Arizona law, how long is the contestability period for a life insurance policy? A. 6 months. B. 1 year. C. 2 years. D. 3 years. Answer C. 2 years. Explanation. The contestability period in Arizona for a life insurance policy is 2 years. During this time, the insurer can investigate and potentially deny a claim based on material misrepresentation or fraud in the application. After 2 years, the policy becomes incontestable except for cases of non-payment of premiums. As 201204. Question 13. Topic: Policy beneficiary designations. Which of the following statements regarding life insurance beneficiary designations is correct under Arizona law? A. A policyholder can only name family members as beneficiaries. B. A policyholder can name anyone, including a trust, as the beneficiary. C. Beneficiary designations must be reviewed by the state before the policy is issued. D. Beneficiaries must be over the age of 18 to receive the policy's death benefit. Answer B. The policyholder can name anyone, including a trust, as the beneficiary. Explanation: in Arizona, a policyholder has the freedom to designate anyone, including a person, trust, or entity, as the beneficiary of a life insurance policy. There are no state restrictions on the age of the beneficiary, but if a minor is named, the proceeds are typically held in a trust or by a guardian until the minor reaches the age of majority. Ars 201123. Question 14. Topic: Conversion privilege. What does the conversion privilege allow in a convertible term life insurance policy? A. Convert the term policy to another term policy without evidence of insurability. B. Convert the term policy into a permanent policy without evidence of insurability. C. Convert the term policy into a group policy. D. Convert the term policy into an accidental death and dismemberment policy. Answer: B. Convert the term policy into a permanent policy without evidence of insurability. Explanation: a conversion privilege allows the policyholder of a convertible term life insurance policy to convert it into a permanent life insurance policy, such as whole or universal life, without providing additional evidence of insurability. The premiums for the new policy will be based on the insured's age at the time of conversion. Ars 201211. Question 15. Topic: Settlement options. Which of the following is not a typical settlement option for life insurance policy proceeds in Arizona? A. Lump sum payment. B. Fixed period payments. C. Retained asset account. D. Tax-free investment income. Answer: D. Tax-free investment income. Explanation: while life insurance death benefits can be paid out in various ways, including lump sum payments, fixed period payments, and retained asset accounts, they do not generate tax-free investment income. While the death benefit itself is generally income tax-free, any interest earned on the retained assets or installment payments may be subject to taxation. Ars 201209. Question 16. Topic: Suicide clause. Under Arizona law, what happens if the insured commits suicide within the first 2 years of a term life insurance policy? A. The death benefit is paid in full to the beneficiary. B. The policy is null and void and no benefits are paid. C. The premiums paid are refunded but no death benefit is paid. D. Only half of the death benefit is paid to the beneficiary. Answer: C. The premiums paid are refunded but no death benefit is paid. Explanation: in Arizona, if the insured commits suicide within the first 2 years of the policy, the suicide exclusion period, the insurer is only obligated to return the premiums paid and no death benefit is issued. After 2 years, the death benefit is typically paid regardless of the cause of death. Ars 201220. Question 17. Topic: Group term life insurance. Which of the following is a typical feature of group term life insurance policies offered by employers in Arizona? A. The policyholder is required to undergo a medical exam. B. The policy is non-renewable. C. Coverage is generally offered without proof of insurability for initial enrollment. D. Group policies cannot be converted to individual policies. Answer: C. Coverage is generally offered without proof of insurability for initial enrollment. Explanation: group term life insurance policies offered by employers typically provide coverage without the need for employees to provide proof of insurability during the initial enrollment period. However, if an employee declines coverage during this period and later wishes to enroll, they may be required to provide evidence of insurability. Group policies are often renewable and may offer a conversion option. Ars 201251. Question 18. Topic: Life insurance riders. Which life insurance rider allows the policyholder to access a portion of the death benefit if diagnosed with a terminal illness? A. Accidental death benefit rider. B. Waiver of premium rider. C. Accelerated death benefit rider. D. Guaranteed insurability rider. Answer: C. Accelerated death benefit rider. Explanation: the accelerated death benefit rider allows the policyholder to access a portion of the death benefit if diagnosed with a terminal illness, typically when the insured's life expectancy is 12 months or less. The remainder of the death benefit is paid to beneficiaries upon the insured's death. This rider provides financial relief for medical expenses during the insured's final months. Ars 201134. Question 19. Topic: Insurable interest. In Arizona, which of the following is required to demonstrate insurable interest for the purchase of a life insurance policy? A. The policyholder must prove a significant financial benefit in the insured's continued life. B. The policyholder must have a blood relationship to the insured. C. The policyholder must be employed by the same company as the insured. D. The policyholder must live in the same household as the insured. Answer A. The policyholder must prove a significant financial benefit in the insured's continued life. Explanation. Insurable interest exists when the policyholder has a significant financial interest in the insured's continued life. This may arise from family relationships, business partnerships, or creditor-debtor relationships. The policyholder must prove that they will experience financial loss or hardship if the insured dies. Ars 201104. Question 20. Topic: Fraudulent misstatements. If an insured makes a fraudulent misstatement on a term life insurance application, what is the insurer's course of action under Arizona law if the fraud is discovered after the contestability period? A. The insurer must pay the full death benefit regardless of the fraud. B. The insurer can void the policy and refuse to pay the death benefit. C. The insurer can only reduce the death benefit by the amount of unpaid premiums. D. The insurer must refund all premiums paid to the beneficiary. Answer B. The insurer can void the policy and refuse to pay the death benefit. Explanation. If an insured makes a fraudulent misstatement on their life insurance application and the fraud is discovered even after the contestability period, the insurer may have the right to void the policy and deny the death benefit. Fraudulent misrepresentation is one of the few exceptions to the incontestability rule. Ars 201204. Question 21. Topic: Assignment of life insurance policies. Which of the following is true regarding the assignment of a life insurance policy in Arizona? A. Assignment is not allowed under Arizona law. B. An assignment must be approved by the insurer before it becomes effective. C. The policyholder can assign the policy to another party without the insurer's consent. D. Assignment is only allowed if the policyholder is terminally ill. Answer C. The policyholder can assign the policy to another party without the insurer's consent. Explanation. In Arizona, a policyholder has the right to assign a life insurance policy to another party without needing the insurer's consent. However, the insurer must be notified of the assignment for it to be effective. Assignments are often used as collateral for loans. Ars 201135. Question 22. Topic: Arizona free look period. What is the minimum free look period for a life insurance policy in Arizona? A. 7 days. B. 10 days. C. 20 days. D. 30 days. Answer B. 10 days. Explanation. Arizona law requires that life insurance policies provide a free look period of at least 10 days. During this time, the policyholder can review the policy and return it for a full refund of any premiums paid if they decide to cancel. Ars 201243. Question 23. Topic: Misstatement of age clause. What happens if the insured's age is misstated on a life insurance policy application in Arizona? A. The policy is voided and premiums are refunded. B. The death benefit is adjusted to what the premiums would have purchased at the correct age. C. The insurer can increase the premiums retroactively. D. The insurer will deny any death benefit claim. Answer B. The death benefit is adjusted to what the premiums would have purchased at the correct age. Explanation. If the insured's age is misstated on a life insurance policy in Arizona, the insurer will adjust the death benefit to reflect the coverage that the actual premium would have purchased at the correct age. This prevents the policy from being voided while maintaining fairness for the insurer. Ars 201208. Question 24. Topic: Premium payment modes. Which of the following is not a common mode of premium payment for life insurance policies in Arizona? A. Annual. B. Monthly. C. Biweekly. D. Quarterly. Answer C. Biweekly. Explanation. The common modes of premium payment for life insurance policies in Arizona include annual, semi-annual, quarterly, and monthly. Biweekly payments are generally not offered by life insurers. Policyholders can choose a mode that suits their financial situation, though more frequent payments often result in higher overall costs due to administrative fees. Ars 201212. Question 25. Topic: Irrevocable beneficiary. What is one characteristic of an irrevocable beneficiary in a life insurance policy in Arizona? A. The policyholder can change the beneficiary at any time without notice. B. The policyholder must get the beneficiary's consent before making changes to the policy. C. The beneficiary can be removed without their knowledge if the policyholder wishes. D. The policy is automatically cancelled upon the beneficiary's death. Correct answer. B. The policyholder must get the beneficiary's consent before making changes to the policy. Explanation. An irrevocable beneficiary has certain rights that prevent the policyholder from making changes to the beneficiary designation or the policy's cash value without the beneficiary's consent. This offers added protection to the beneficiary. Ars 201127. Question 26. Topic: Arizona Life Insurance License Renewal. How often must a life insurance agent in Arizona renew their license? A. Every year. B. Every 2 years. C. Every 3 years. D. Every 5 years. Answer: B. Every 2 years. Explanation: in Arizona, life insurance agents are required to renew their licenses every 2 years. They must also meet continuing education requirements, which include a minimum of 40 hours of approved education during each renewal period. Ars 202902. Question 27. Topic: Reinstatement of lapsed policy. Which of the following is NOT typically required to reinstate a lapsed life insurance policy in Arizona? A. Payment of overdue premiums. B. Proof of insurability. C. Payment of a reinstatement fee. D. Statement of good health. Answer: C. Payment of a reinstatement fee. Explanation: to reinstate a lapsed life insurance policy in Arizona, the policyholder is generally required to pay overdue premiums, provide proof of insurability, and submit a statement of good health. However, there is typically no reinstatement fee required. Ars 201205. Question 20. Topic: Incontestability clause. The incontestability clause in an Arizona life insurance policy means that after a certain period, the insurer cannot A. Cancel the policy due to non-payment of premiums, B. Cancel the policy due to fraud or misrepresentation in the application, C. Adjust the premium rate due to the insured's change in health, D. Contest claims based on misstatements in the application. Answer: D. Contest claims based on misstatements in the application. Explanation: after the contestability period, usually 2 years, the incontestability clause in Arizona life insurance policies prevents the insurer from voiding the policy or denying claims based on misstatements in the application except in cases of fraud. Ars 201204. Question 29. Topic: Cash surrender value. What happens when a policyholder surrenders a life insurance policy for its cash value in Arizona? A. The policyholder receives the cash surrender value and the policy remains in force. B. The policyholder forfeits any death benefit and the policy is cancelled. C. The insurer continues to provide coverage until the cash value is exhausted. D. The policyholder must repay any loans before receiving the cash surrender value. Answer: B. The policyholder forfeits any death benefit and the policy is cancelled. Explanation: when a policyholder surrenders a life insurance policy for its cash value, the policy is cancelled and the death benefit is forfeited. The policyholder receives the cash surrender value, which may be reduced by any outstanding loans or surrender charges. Ars 201210. Question 30. Topic: Waiver of premium rider. Which situation would trigger the waiver of premium rider in a life insurance policy in Arizona? A. The insured loses their job. B. The insured becomes permanently disabled. C. The insured passes away. D. The insured files for bankruptcy. Answer: B. The insured becomes permanently disabled. Explanation: a waiver of premium rider waives the policyholder's obligation to pay premiums if they become totally and permanently disabled, ensuring that the policy remains in force even when the policyholder is unable to work. It's commonly added to life insurance policies in Arizona to provide financial protection in the event of disability. Ars 201231.